Hey guys, this is Ricardo, the Superman of real estate with Forever Home Realty, and today I want to talk about the home buying process. So right here we have, and don't mind my Picasso drawings, we have a stick figure family right here. Imagine it's you, and you want to be a homeowner. So the very first thing that we have to do to be able to buy or purchase a property is we need to see what's called a mortgage lender or a lender. The lender actually works for the bank. The bank is the institute that's going to give you the funds to be able to purchase your home. I'm actually going to be asking you of these documents: 2 years of taxes with your W-2s and 1099s, a month of paycheck stubs, 2 months of bank statements, your social security card and your government issued ID, your credit score to be at around a 640. That is if you want to get the down payment assistance, but you can technically get a home loan with a credit score of 580. You're not going to be getting the best interest rates out there, but you can still qualify. But at least I would tell my clients, hey, try to have at least a 640 so that you can qualify for the down payment assistance. And the final item that I need you to have is any sort of down payment money. Ricardo, I want the down payment assistance programs. Well, there's always a catch. They are going to give you, let's say per se, the down payment money, but there's still what's called closing costs. Closing costs is the cost that the bank charges you, the family or the individual, to give you or lend you this money. And when you get any sort of down payment assistance, the fees actually go a little bit higher than if you were to get a normal loan and pay your own down payment and closing costs. So keep that in mind, okay? So these are the documents that the lender will ask of you so that you can get what's called pre-approved. So once you're what's called pre-approved, you're gonna get what's called a pre-approval letter saying, hey, Mr. and Mrs. Joe, Mrs. Maria, you are now qualified for a certain amount. In this scenario, I'm going to be using the example of $300,000. Okay, so once you have your money in your pocket, now you can actually go house shopping. Okay, so that's going to be the following step after you get pre-approved is you're going to go ahead and see what's called your real estate agent or your realtor. The reason why I like to have a meeting with some of my clients or majority of my clients before we go house shopping is because I need to set some expectations with them. I need to explain to them what's going to happen. Exactly what I'm explaining here now, that is what I'm going to do with my clients before we go out and house hunting. I'm going to explain to them, what are the other fees besides the closing costs and down payment that they need to pay out of pocket? What are we going to expect in the marketplace? So I'm not sure if you know or you heard, but in today's real estate market, the market is very hot. So that means that now, instead of having just your down payment and closing costs, now you need to have money to pay above the appraised value in case the value does not come in at your purchase price. So that is why I like to meet, or if I'm not your realtor, go ahead and have a meeting with your real estate agent and make sure that they explain to you or have them explain to you what to expect from that moment on. This is one of my favorite steps. It's called the house hunting. So that is why I have a meeting with my clients beforehand just to ask what do they expect in their new home, how many beds, how many baths, what's out of town, do they want to live close to their work, backyard, no HOA, the whole 9 yards. So this step can take anywhere from 1 day to a couple months. Usually I try to find their home as soon as possible. They say time is money, and I try to help them find the right home for them. Okay, but this usually takes about a day to a couple of months, and when we find the right home, then that's when we go to the following step, which is submit an offer. So now let's say that we made a decision that we like the home, and I'm not one of those realtors that are very pushy and I tell you, hey, submit an offer. I just make sure that it fits your needs. If it fits your needs and I feel it's the right home for you, I would advise you to submit an offer. So usually right now, when you submit an offer, Right now we're offering anywhere between 10 to 15,000 above the list price or the offered price. And then also, like I mentioned before, right now is the time when people are offering above the appraised value. So I just want to set that expectation, like I said beforehand, just to let them know how the marketplace is going and to tell them that we may potentially need to offer above the appraised value. So this is when we actually submit the offer. Once you submit an offer, I'll text you, hey, the offer has been sent. In a couple of days, we will actually hear back from the seller and the seller's agent, the listing agent, and they're gonna let us know either the offer was accepted or the offer was rejected, or they will send out what's called a counter offer. If the offer is rejected, that means someone else beat us to the house and we have to go back to the step of house hunting. If the offer was accepted, then that's where we're going to be moving over to our contract or our RPA, residential purchase agreement. And in the next step, I'm going to be explaining what are the different contingencies that we have in the real estate contract. Let's say your offer has been accepted. The very first thing that we have to do is give what's called the EMD, or the earnest money deposit, or some of us call it the deposit of good faith. The earnest money deposit is usually deposited into what's called the escrow company or the title company within 24 to 48 hours. And this is usually written in the contract. So let's say that we do not submit the earnest money deposit within the allotted time. This contract can actually be voided and it will be like a canceled contract. So get with your realtor, but you have to make sure that anything that is stated in your real estate contract that you guys must follow to the T. Real estate is, there's different laws and we are practicing law, but we're not actually lawyers. So if it says within 24 to 48 hours, we must deposit the earnest money deposit within that time. The earnest money deposit is usually around 1% of the purchase price. For a house for $300,000, it would be around $3,000. The following step is what's called the inspection, and we do the inspection during what's called the due diligence period. Usually customary, out of all the years I've been doing the real estate game, it's been around 10 days. Now with this hot market, it's been now within 5 to 7 days. So this time has been shortened just so we can show the seller that we are gonna get the inspection done quicker. We're gonna be asking for any type of repairs, if any. At this market, we're not asking for a lot of repairs either. So the inspection is usually within 10 days. And this is one of the other fees or costs that's gonna be out of the buyer's pocket, which is around $280 to $380. Sometimes it can even go a little bit higher. And there is only one factor that determines, make sure you get with your realtor to make sure they help you find a good inspector. And also it's gonna be based off the square footage. The bigger the home, the more expensive your home inspection will be. The third item that we have here is what's called the appraisal or the appraisal contingency. The appraisal contingency, usually it's about 20 days. Now in today's market, how I mentioned, we're starting to shorten these time frames. So now it's about 15 days. We have people doing appraisals within 15 days. So you have to pay what's called a rush fee. So the appraisal costs anywhere between $450 to $550. And if you're paying for a rush fee, it's gonna be above that price. So the appraisal, what happens in the appraisal, the bank will send a third-party appraisal company, will send it over to the house. They're gonna take their notes beforehand. They're gonna check within half to 1 mile radius of the property, of other properties that have sold. Usually they compare to similar bedrooms, if it had a pool, if it had a garage, and they're going to make sure that the property is worth what we're in contract for. So for $300,000. I've had many cases where the appraisal value actually comes in a little bit higher than what we're in contract for. And I usually don't say anything at that point. A lot of the times right now we have some appraisals that are coming in lower. So let's say that the appraisal, if we were in contract for $300,000, the appraisal would come in at $290,000. That is where that money and the offer that we initially submitted saying that we are willing to pay any sort of money above the appraised value. Now, let's say that we didn't have any money. Let's say that the appraisal came in at $290,000 and the seller says, you know what, I feel that's a little bit too low for my house. I don't want to proceed with this appraised value. So at that point, we would have to cancel the transaction. And at this point, you would lose your appraisal money. You would lose your inspection money. The only monies that you would be able to be returned to you is your earnest money deposit. And of course, if it was completed within the allotted time. So that's number 3, the appraisal contingency. And now we're going to go on to the next one. The fourth and final contingency that we have, it's what's called the final loan approval. So we have, usually it's around 30 days. And this is the time that the lender and the bank has so that they can give us what's called the final loan approval. So throughout all these time frames, the 10th day, the 20th day, the 30th day, your lender is going to be asking for any updated bank statements. They're going to be asking for new paycheck stubs. Or maybe you may have to do what's called a gift letter that maybe someone else gifted you the money to be able to purchase your house. So during this time, your lender is going to be actively asking for updated documents, and we need you to be able to provide those documents as soon as possible. Okay. We have 30 days to get the final loan approval. As soon as we have what's called the final loan approval from the lender and the bank, that is when we can officially go ahead and go to the title company. Before we go to what's called the escrow company or the title company, the lender or the bank will prepare what's called loan documents. So the loan documents are going to be the final documents that you are going to sign from your bank. It's going to state your interest rate. It's going to state the term of years of the loan, for how many months, how many payments you're going to do. So this is going to be the signing at the escrow company. Something that the escrow company does is they make sure that there is no liens against the property, and they also make sure that the property is transferred to the new owner, you or your family, that is transferred clear with a clear title, which means there's not going to be any liens. If any liens were on the property, they would have to be paid for beforehand so that you can receive what's called a clear title. So that is when you go ahead and sign with the title company. The next step after this, we do what's called a final walkthrough. I usually do it sometimes before we go and do and sign, and sometimes I do it maybe the same day of the signing. So what the final walkthrough is, if there was any repairs that we asked for from the seller during the inspection period, that is the period that we have, or the day that we have, so that we can go and inspect it, make sure that the repairs were completed. And usually what a final walkthrough is for is so that you can confirm that the property is still there, make sure it hasn't been vandalized, make sure no one has broken into it, or stolen, a pool pump or an AC. When I first started as an agent, I was part of another company, and luckily the listing agent was in the same company. But what happened, there was some kids that opened the door, they broke in and they started to burn some of the countertops. They broke some windows, they broke some lighting, and I had no idea. I really didn't know about this walkthrough because that was one of my first transactions. But my broker or my managing broker had said that always do your final walkthrough, and that was a very good lesson I had early on. So definitely, guys, always do your final walkthrough before you close on your property. All right, guys, so after we do the final walkthrough, then the title company will send the documents back over to the lender. They're gonna go ahead and recheck them, and then they're gonna send them back to the title company, and they're gonna release the file to recording. So within your county, right here, it's called the Clark County. So the Clark County, the title company will send the closing packet over to them, and they're just going to confirm that the property has been recorded. Once we receive, the real estate agent receives an email from the title company saying, congratulations, the property has been recorded. That is when you officially become a homeowner, and that is when I can give you the keys to your new home. This is the home buying process. I try to break it down as the simplest way that I could. Like I said, I use stick figures. But if you have any questions about the home buying process, you can message me or call me. But this is overall in the simplest way the home buying process. Follow me for more real estate tips. This is the Superman of Real Estate, and I'll see you next time.